already 1:30 and we will continue for the next session.
All right, good afternoon. So there was a question from someone regarding that do we need to submit notes for each of the subtopic, or can we combine it into one assignment? Since the change between one topic to another is unclear and the explanation is not following the assignment order in Google Classroom. So my response would be that for each topic that is there, it is good to, because I'm presenting holistically all the topics. The topics that you see there in the Google Classroom is actually reflection of the topics in certificate of digital innovation in finance. So they are following that order. So we will be giving you all the slides that I'm presenting, and then what you could do is to use those as references and also do your bit of your own research to make notes for each subtopic, so that you get an exact same experience when you actually do the ACCA Cert Diff. They also ask you to do the same note for each topic, and then your quiz for each topic, and then you submit that, and then you get your ACCA Cert Diff. Of course, because of our arrangement currently, we are not doing the full ACCA Cert Diff, but this is a good experience for you to do that. So I still would want to have, because I can't cover all the topics as today, because the time is only this 5 hours and the 3 hours later on. Yeah. So if possible, still do the same. Yeah. Miss Tias, if you can respond to that question earlier. Yeah. Are you there, Miss Tias?
Hello, sir. Hello.
Yeah.
Okay.
So you respond to that query. Yeah, there was a query, right?
Yes, sir.
I still need the full individual notes. Yeah, per topic lah, per topic. Later, Pak Joshua, if they decide to do the full Cert Diff, then I think it's, they can go through the whole material. And all I've done is just condense it into this session. Yeah.
Yes, sure, Pak.
Okay. Great. Let's start off, Ms. Dias.
Okay. You want to continue with the Bitcoin for the previous slide, sir?
Let's go for
this digital transformation.
Digital transformation, correct.
Reminder ya to all participants, please turn your camera on because I still see a lot of students haven't turned on their camera.
Correct. Thank you. Okay, so guys, let's have an attention. So thank you for what you did before the lunch break. It was a good simulation. I hope you'll do more of that in your own classes, in your own experience, dealing with data, quickly get data, and then, get used to this. So in the morning half, I explained about how data can help you to interpret. In the afternoon half, what I want to say to you is how do you actually bring these changes to the organization? Like what I said, one of the key points was that digitization is not about technology. So let's see what it is about then. Next. You have a video here, Ms. Dias?
Yes, sir.
Okay. Kim.
Hello. We're now going to look beyond the technologies themselves that are changing the way in which we work as accountants and look more explicitly at the subject of digital transformation. How is technology changing the organisations that we work in? And how do we ensure that we stay in control of that change, steering it and leading it rather than it happening to us? And we're going to look at that subject of digital transformation by answering a number of questions. What is digital transformation? What is the role of finance in digital transformation? How do we develop a digital transformation strategy? How do we manage the change? What is the impact likely to be on our internal processes? And what's the impact likely to be on the way in which we develop our products and services and deliver them to customers?
Okay, so the digital transformation is about these 6 steps. Yeah, so if you see the stages, before it gets into the stage number 6, technology, you need to get into these first 5 stages first. Yeah, so this changes a lot of mindset of implementing any digitalization process in a company. Yeah, so like what I shared with you earlier, we were doing a bank reconciliation project, and this is what we went through. You know, we had to reframe the mindset of the people in the finance department that guys, don't worry, we are not taking away the core team of the bank reconciliation. All we are doing is so that we can reallocate and reskill you into other work. So let the reconciliation be done by the system. Obviously, they worry about their position, their titles, their salaries. So and their, you know, where will it be in the future? Because it's very threatening, you know, when you have such changes. So the mindset of adapting to something new. So it's always adopt or die. If you wish to not adopt, then you will have no choice but to die. Yeah. So mindset is important. So if people tell you, is the finance profession dying? No, only those professionals who are not willing to adapt these changes will probably not have work anymore. Yeah. So mindset is important. People focus. You have to do a thorough planning in terms of bringing about a change. So my experience is that when you're bringing this digital changes, the issue about is that somehow people will always say that I think we were doing better in the previous. You know, there's always this group of people who will say we were doing better in the previous system. Things were faster. Things like, so my suggestion is don't implement these changes in a big scale. You know, so don't do that big scale changes. Do pilot testing in a small process, in a small business unit. You know, so it's important that we are not, because if you are doing any mistakes or anything that goes wrong, the impact is not to the whole organization. So I think it's always so like what I said. Now we are doing bank reconciliation. Our next stage is to handle receivables. Then we'll go to payables. Then we'll be going into treasury functions. So then slowly the whole digitization process will come. If you directly hit the whole organization, like what NHS did, spending $10 billion, it's a waste of lots of resources. Yeah. So do pilot. My note, please, if you're taking note, my note is do it in a pilot business unit, do it in a pilot business process. Then when it comes to culture, the culture is the culture of like what I said, the creative destruction. Yeah. So in order to learn something new, the culture that needs to be developed is the culture of unlearning. Yeah. Unlearning is a quite a difficult thing to do. So you already learned something for so many years, so used to it was already done in the previous year. Now you're telling me we are not going to do this anymore. It's like too much to take, you know. So but it requires when I say when you do it in stages, the culture will be easy to adopt. That okay, I will do this much particular change. You see, there was no such damage. You are still there in the company. You didn't get fired. You're learning something new. So getting people to win, you need to win people into doing this. Yeah. So the cultural transformation happens by allowing people to do mistakes, the culture of errors. Yeah, there you will never have a perfect digitization completely done. I tell you, we started the bank reconciliation digitization in the month of I think yes, we started in September or October last year, if I remember clearly. It was it last year, yeah, and we were thinking that we will finish by February. Until June, the auditors keep saying, sorry, we'll have to still stick to this manual. It is not totally happening yet. So there were so many errors, the bugs. When you do reconciliation, you feel that, okay, I already reconciled total numbers, what you learn in our program. Oh, you already reconciled the total, timing differences. But the system wants you to have a daily, and then the reconciliation has to be per transaction. So we cannot just do global netting off. Yeah, so it can get very frustrating. So if you're talking about culture, it's the culture of ability to accept certain delays, accept certain failures, accept certain trials. So that's the culture. So and then your company gets used to this. Wow, there's a change. Okay, we are good to go. We have the Japanese guys have difficulty with this cultural thing because for them everything is bureaucracy. So much of hierarchy is present. Yeah. Then besides culture, you need to have the right processes. You need to form committees for setting up this digitization for a particular pilot. There has to be a person in charge, somebody who's being, and the committee has to be involved from various departments, not centralized to IT. So that's a process that has to take place. As much as possible, if you try to partner with many units, you will do well. Yeah, and the tools that are there in terms of the training that you will provide them prior to the launching of these campaigns will really help them. Yeah, so the tool is referring to more on the training side of things. Yeah, so this is in Indonesia also they are doing the OJK recently launched digital transformation in sector jasa keuangan. Also they are adopting this framework before directly going to the technology. So you'll see a lot of changes in the banking regulation. If you go in the stock markets, all the traditional banks are at the lowest share price, but banks like Bank Jago, Bank Neo, all of them are at a very high price growth. Yeah, around prior to lunch, I was saying yesterday grew around 15%. Bank Neo. So you know that these transformations, no matter how hard OJK wants to be, but it's unavoidable. But this is the model that OJK is adopting now. Yeah, so I took it from there. Next. Yeah, so digital transformation is culturally driven, not technology driven. So I hope I have made that it's culturally driven, not technology driven. Next.
The role of the finance profession in digital change is really twofold. It involves the organizations that they are helping to direct, and it involves their own personal roles. Now, in terms of the organizational direction, if you like, finance people have a responsibility to make sure that resources are used correctly and appropriately and efficiently.
So they will have a role in making sure that any technology that's used within an organization, the new technology that's brought into an organization, is appropriate for that organization. One of the things that can happen with technology is that people can get carried away with the shiny new tech that they really want to play with. And that's not always a very good thing for organizations, because it can be a massive waste of money, a massive waste of time. It can even cause problems by creating inefficiencies elsewhere in an organization. And it's the role of the finance profession, I think, to help manage that risk. But there's another thing: their own internal organizational processes. And these are being massively changed through digital technology. So a lot of the things that finance professionals do are being automated. Things like making payments, bookkeeping, things like that. These are skills that are gradually being eroded by computers, and we don't need them to the extent. That doesn't mean we don't need accountants, of course, far from it. What we're doing with technology here is freeing people up from the routine, the dull, the mundane tasks that have taken up a lot of their time, and giving them the opportunity to use their brains, which is what people are good at using, their creativity, their problem-solving ability to come up with better solutions. And that's a very, very important point to make, because we're not going to see the accounting profession, the finance profession disappear because of digital technology, but we are going to see its role change and become far more to do with adding value to organizations than counting value. Digital transformation is going to affect every single corner of society. Now, it's certainly true that some industries are engaging with it more rapidly than others. So, for instance, when we're looking at the media industries, which have been largely transformed by technology, of course, they're having to engage with it if they're going to survive. Looking at newspapers, which are in some cases going purely online, for instance. That's a massive change. But then we're looking at other businesses which are slower to adapt. I spent a little bit of time with a defense contractor, a company that was involved fairly heavily in the maintenance of aircraft, amongst other things. They had a lot of men with spanners. They were men and they carried spanners. Now, these men on the ground were very interested in digital technology. They were really interested in, for instance, using smart spanners, which could tell them when they'd tighten up a bolt sufficiently without breaking it and things like that. They were absolutely up for the investment in digital technology, which was going to change those aircraft hangars into smart spaces. The business as a whole, though, was less keen on this idea, because the managers in that business saw the everyday problems as things that needed solutions. And they reckoned that if they could keep things going today, tomorrow, the next day, they were doing their job. They didn't really think about what might be coming down the road a month away or a year away. They were just interested in today. Businesses like that, businesses in manufacturing, have, in the UK at least, been quite slow to transform themselves through the use of technology. And I think that's a danger for our country. I think there are a number of things that drive change. There is the increasing power of computers. That means increasing processing power. It means increasing speed of processing. It means greater communicability between different systems and different machines. It means smaller machines, so we can use them in different ways. I mean, ultimately, nanotechnology might mean we have computers actually in our brains, for instance. So That is one thing, the increasing power and the decreasing size of computers, coupled, of course, with the decreasing cost of computers, which means that they are more available to any organization that wishes to use them. The second thing, I think, is the lowering of barriers to entry. So more organizations can access powerful computing and can access audiences from different parts of the world, from different areas of society. This means that it's far easier for organizations to break into a new market than it has been in the past. And then the third thing that's driving this change is consumers. Because consumers are getting used to having technology. They're getting used to working in a particular way and living in a particular way, and they are demanding that organizations that serve them change too. So, for instance, they know full well that organizations have a lot of data about them. And so when they phone up, they expect that data to be on hand, available to the person they're talking to. And if it's not, that creates frustration and anger, and it creates a tendency to leave that organization and go to another organization that's using the technology properly. Digital transformation is not something that should be led by the IT department. IT departments are very important. The flow of information and data around organizations is very important, but digital transformation isn't just about IT. It's not just about data. Take the marketing department. The marketing department uses a huge amount of technology and has done for the last 20 years when it comes to, for instance, targeting adverts, following people around with adverts online, that sort of thing. These are hugely IT-intensive processes, but they're not controlled by the IT department. They're controlled by the marketing department. Digital technology is something that influences every corner of an organization. And therefore, it needs to be led from the top of an organization, from the people who have a holistic perspective of the organization and who can see how the different parts of an organization fit together and affect one another. In other words, digital transformation needs to be led from the very top.
Yeah, so isn't it interesting that at this point in time, there is no difference between big and small. Pay attention to this, yeah? There's no difference between big and small. There's no difference between old and new. As long as you are able to have such technology at your hand, you wouldn't imagine, right, that Bank Mandiri being the bank with the highest, biggest asset. You know, I was an auditor of Bank Mandiri back in EY, of Bank BRI. You know, I mean, there were 192 branches, you know, and now you imagine this new guys, Bank Jago and Bank Neo. These guys are able to enter and grab such markets. Isn't it amazing that now it's not about anymore that, oh, I'm used, so I cannot fight with the big guns, you know. Now with your technology, the customers don't care. Customers only see their handphones in front of them, right? So if you're providing them the same service, like the gentleman said earlier, that when customers call, they already expect you to have their data, and if you do not have, if you don't serve them with that their data, then they get frustrated. So as long as you can serve them over through their handphones, they are good to go. Yeah, so that's a very transforming mindset That it's not about big and small. It's not about new and old. I don't know if you're familiar with this platform or accounting software called Xero. Have you ever tried Xero? Xero. Anyone? If you have, you can raise your hand. No. If you do get opportunity to learn Xero, I'm doing that for our students at the moment. Some of our team knows. Yes, Ms. Tias wrote it there. Xero, Xero. So it's a cloud-based platform, accounting software, and they are powered by machine learning. Yeah. So you know what machine learning is? Machine learning is whereby you have algorithms which are like, you know, earlier I told you how you train your dog. So you train your machine with, you train them with data. So if you train Xero with the kind of the, you know, when you make chart of accounts, you put your code, right? Code of accounts there. So wherever you put your codes, they are actually studying which code you are allocating for which account. And then how you are posting your journal entries. So so they are learning from you while you are inputting this entry. So when the next time when you are inputting new data, so the algorithm is learned on the old data, which is your existing entry that you are making. But when you make your new entries there will be suggestions from the Xero platform. So which after learning, analyzing at least 80% of the data, then they'll get so good at it. You know, my staff, one of my staff, she's using Xero. Only basic qualification in accounting. Once she started doing those entries, the next time becomes so easy. You know, so when we were doing all this outsourcing, we do accounting outsourcing projects for companies in Singapore who have subsidiary in Indonesia. They love Xero because they want to consolidate everything in Xero in the cloud, and you can monitor your business performance on your phone real time, because it has, and then even what the investor is looking for, every time they search, they're learning what the investor wants. So the next time when you come in again, they know, oh, are you looking for inventory movements today? This is the inventory movement. So a lot of suggestions. It's amazing if you can learn Xero. Yeah. So such machine learning and backed platforms are very useful. Yeah, especially for finance professionals like yourself. Now, which areas are being used in accounting? If you look at this graph, you will see that there's a range of tasks, mostly in the area of making payments. Yeah, if you see, once you are able to inform the system that on a certain day, I need to pay so and so person. So it's already pre-programmed in the system, and then you can also, you know, let's say there are 20 vendors you need to pay on the 15th of August. So you can pre-program that, and the system will work it out for you. On the next time when you go on September, it will suggest to you, do you want to process the vendor payments? Proceed. You can go to sleep and come back and your payments are already processed. Likewise, we were talking to one ACCM member in Siemens Indonesia, Mr. Asad. So he was saying that you know, he's required to make around 500 invoices in a week, and all he does is he uses the RPA, robotic process automation. So he already has taught. So you become a teacher, you know, he has already taught the system how to create the invoices, where to get the quantities, where to get the prices, how to input, what does he want in the description. He is all this, you're teaching. So machine is learning from you. Once they already learn, he says, I go off to my another meeting. I come back to the museum, my 500 invoices are already issued. So I said, wow, this is our dream, you know. So imagine the kind of work finance team are doing, manual data entries. You know, one of the biggest chunk of work is done in data entry. Now, data entry is prone to errors, right? Because it's human involvement. But now, data entry doesn't have to be manual. There's ways to extract data from your source document. Yeah, like if you were to, let's say you want to capture data, you can use your phone on top of your purchase orders, and then from purchase orders to your goods receive notes, you put that, and then from the date from that scan of the document, you can the text is extracted and then input into the spreadsheet. The spreadsheet is pre-prepared in terms of the rows and columns, so it's already pre-formatted, and then from the spreadsheet, data is going directly. So you minimize data entry. This is the dream thing, you know. So if you're able to do that, the people who were involved in data entry now can be used for other work, other important work, right? Like what you did before the lunch, you know, preparing analysis. And now I can really use myself. That's why I said technology makes you more human, because now I can be used more in my judgments, thinking. The finance professionals are used in the thinking side, not in the doing side, you know. So payments, accounts receivables, payables, financial planning. Also, do you know how much time is wasted making your SPT? Do you know how to fill your SPT? You have learned Indonesian tax, right? In which semester do you learn Indonesian tax?
Some of them, but batch 2018, 17 already learned Indonesia tax.
Nah, so they learned the SPT.
Sorry, 18 and 19.
18 and 19. So they learn how to fill up the SPT, kan ya, Pak?
Supposed to be, because I'm not the teacher, but supposed to be. Yeah, Kathleen, you can share, or also Monica, you can share.
What do you do in your tax classes? Do you learn how to fill up your SPT?
Indonesia taxation course, yeah, not F6, yeah, not taxation,
not
ACC,
Singapore,
yes.
no.
Yeah, Indonesia taxation course.
Kathleen, do you do that?
Hello.
Yes.
Yes, sir. I learned it in fourth semester.
What is your experience doing that SPT? Do you, because looking at the number of forms, you know, it's the front summarized form, the breakdown forms, you know, harta column forms. Do you find yourself doing repetitive stuff, you know, repeating stuff in there? I don't know. What was your experience?
So at first, when I'm looking at the form, actually it's a little bit confusing since
Confusing.
there are many things to fill, and then if I'm thinking if I have to do it every year, it will be like boring and a waste of time, since some of them is like could be the same information that I have to fill.
Exactly, and you know, this is then ended up used by tax consultants to charge so much of fees to you because they want to help you fill up your SPT, because you don't want to fill it up. You know, sometimes the payment to the tax consultant is higher than the tax itself, which does not make any sense, right? The tax consultants are charging more. So didn't you wish that the moment you already put your pendapatan kena pajak, yeah, your chargeable income, and you identify all the items which are deductible and not deductible in the system, automatically the moment the Excel sheet already comes up with the pajak terutang, immediately everything is automatically feed into your SPT, and your SPT is ready. Wouldn't that be more amusing and less time spent? You save cost, right? You don't have to pay expensive consultants to fill up your SPT, and there are already softwares which automate this process. Yeah, so if you learn Xero can be integrated with another tax software where you can put this in, so your results will come. And then the best part is when you're doing your e-filing, from your tax report to the e-filing, there is a way to duplicate forms. You see how Traveloka operates. All they do is they mirror. You say it's a mirror technology. So all they do is mirror the forms needed or the fields needed by each of these hotels, airlines, and these fields are being presented in Traveloka. So actually it's a mirroring thing. It's a mirroring technology. Same like you order, you book hotels in Agoda or in any other. So they just mirror. So these guys simply mirror and create a form, and you fill up your bookings via Traveloka, via Agoda, and you can imagine how big is the valuation of Traveloka and Agoda simply doing mirror business. Mirroring the fields from the hotels, from the airlines, from the tour operators, and then putting it in their site and giving them those additional incentives to buy. Likewise, you can mirror the e-filing forms from the tax website, okay, from the tax website, and then it can be mirrored into the tax software. So when you fill in, those fields are indirectly being input into the e-filing. So you don't even have to do your e-filing manually again. So one-time calculation directly go into your SPT and directly go to your e-filing. Imagine your burden gone. It's all your nights spent on doing tax filing. So this is exactly why digital technology. Why you're learning this today is because when you start working, we want you to take those initiatives. Challenge the company. But why don't we do this? Why don't we take this initiative? This is the reason why we are encouraging you to have this program today. Yeah. Next. Yeah. So what are the things that digital technology will help? Yeah. What are the 4 main components? Yeah. Number 1, things are automation, like what I have given you some examples. Number 2, things are easier to understand because nobody can understand a very thick annual report. Nobody reads them, right? That's what they say. We work so much to create a big, thick annual report. Nobody reads them in a nice dashboard. Customized dashboard. If you learn BI, you have a customized dashboard and real-time dashboard, and you put that in your, you give to your board of directors. I'm the finance leader, graduated from Petra. I'm able to create a dashboard for you. Go and whenever you have any updates in our finances, you can directly check in your phone because BI is cloud and it's real based. So all you need to do is customize the dashboard as per requirement of the company. Yeah, they would like to focus on revenue by product. They want to focus on sales per the sales agent that is deriving those sales. Whatever information they need, you can customize the dashboard and launch it in a real-time BI platform. So visualization is huge value add. It tells a good story. Obviously, with the data analysis, not just quicker and cheaper, but greater accuracy. So in terms of audit, yeah, you like what I said, you don't need to do sampling anymore. You can do 100% testing because of data analysis. So really the risk-based audit, like what we have been talking about in the classes, now it can really be implemented, where audit that used to take like 3 months or 2 months, now it can be done very fast because the system already give you, this is the high risk items, these are the exceptional reports, you focus on these areas, you see. So it gives a lot of efficiency. I even have a fear that there are possibilities that maybe in the future we don't need audit. Maybe, and this is just my personal thought, because the kind of reconciliations the systems are doing, possibly the auditor will not be doing tracing, vouching anymore. Mostly coming to the company and doing advisory work, that these are how your processes could have been better in this kind of report, because all the reconciliations are already done between from one source to another source. The robots can do the audit for you. So possibly, because they always say audit doesn't add any value. You charge so much to me, but what is it for? When I'm auditing clients, they said, you do every year, same questions you ask me every year. And so I said to them that, look, I'm also coming to give you suggestions on your processes, because every year you also have the same business processes and there's no improvement. So if you improve, then we'll not ask you the same questions. Yeah. So I mean, auditing should focus on more value-added activity. Currently, they see it as just a compliance method. So they don't really appreciate. They're doing it simply because the law requires them to be audited, But later, I think audit profession itself will change, will be more value-adding than what it is now. Number 4, connectivity. Yeah, so ability to play around with data with the what-if scenario building, sensitivity analysis. I think that's the key benefit from there. Yeah, so remember 4 things. Yeah, automation, visualization, analysis, connectivity. You make sure that you take it down in your notes. Yeah. Next. Okay. It's just for the benefit of time, since time is limited, I think I'll let them read this, and then I'll go to blockchain, so I can give them a preview. Guys, I'll let you read this, yeah? Some of the roles and responsibilities, who should do it, yeah? Earlier you said somebody at the top, not IT department. Must be somebody at the top who has a holistic view. Yeah. Okay. Let's talk about, so I'm going to talk to you about some emerging technologies. So you are aware about, yeah. So I've told you a bit about cloud computing. Let me tell you about blockchain, yeah, because that's the future of accounting. Okay, Ms. Yes, you want to show the video first?
Okay, may I know first, sir, which slide that I show it to you?
Blockchain, just start with the video first, then I'll talk to them about what it is.
Okay. Give me a minute, sir.
Okay. While Ms. Tias is setting that up, blockchain, to give you a simple illustration or understanding that, you have used, just now you were doing things on Google Sheets, right? Or so one document is shared with multiple user. When somebody makes any changes to that same document, everybody can see the change real time, right? So it almost looks like you are chatting in the same document. So that one block or one information shared by multiple users is a blockchain. So every block has a common document with users which are pre-allocated to that particular document. So if I want to change anything, immediately other person will come to know. If I'm changing my receivables here from the company, and if I'm sharing a common document with my customer, customer will immediately come to see that, oh, my receivables in the supplier's book have changed. You know, we spend a lot of time doing reconciliation, right? With the customer will send a statement, and then we have our own books, and then we reconcile, right? We do a lot of that reconciliation. But now, if we have one document shared with the customer, so every time there are movements, there are sending of goods, there are return of goods, there is discounts or whatever, everything is on the same document. So we don't have to do any reconciliation anymore. So that's what I'm saying. Blockchain is basically a distributed ledger whereby multiple users have access to, and hence, because it's distributed, makes it more reliable. And I'm not able to make any amendments without other people knowing it. Now, this is a small document with 5 users. Imagine this small document, this block of information known to a million users, but everybody will come to know. So if you make any change or any figure change, let's say I want to pay the supplier, and then the account number is already there. And I myself, I'm a staff, and I try to change from the supplier account number. I try to change it and put my own account number so I can take the money. Yeah, immediately 1 million other people will come to know that you have done that. Can you imagine that this is a deterrent, a huge deterrent for people from doing fraud? Yeah. So, but I think you know blockchain only as that particular document which was given a value by multiple people, and you call it Bitcoin. Right? So people know it only as cryptocurrencies, but blockchain is technically an accounting technology. Yeah. So, Mr. Let's hear the video first.
When you vote, have you ever wondered whether your ballot is actually counted? If you meet someone online, how do you know they're who they say they are? When you buy coffee that's labeled fair trade, what makes you so certain of its origin? To be sure, really sure, about any of those questions, you'd need a system where records could be stored, facts could be verified by anyone, and security is guaranteed. That way, no one could cheat the system by editing records, because everyone using the system would be watching. Systems like this are on the horizon, and the software that powers them is called a blockchain. Blockchains store information across a network of personal computers, making them not just decentralized, but distributed. This means no central company or person owns the system, yet everyone can use it and help run it. This is important because it means it's difficult for any one person to take down the network or corrupt it. The people who run the system use their computer to hold bundles of records submitted by others, known as blocks, in a chronological chain. The blockchain uses a form of math called cryptography to ensure that records can't be counterfeited or changed by anyone else. You've probably heard of the blockchain's first killer app, a form of digital cash called Bitcoin that you can send to anyone, even a complete stranger. Bitcoin is different from credit cards, PayPal, or other ways to send money because there isn't a bank or financial middleman involved. Instead, people from all over the world help move the digital money by validating others' Bitcoin transactions with their personal computers, earning a small fee in the process. Bitcoin uses the blockchain by tracking records of ownership over this digital cash, so only one person can be the owner at a time and the cash can't be spent twice, like counterfeit money in the physical world can. But Bitcoin is just the beginning for blockchains. In the future, blockchains that manage and verify online data could enable us to launch companies that are entirely run by algorithms, making self-driving cars safer, help us protect our online identities, and even track the billions of devices on the Internet of Things. These innovations will change our lives forever, and it's all just beginning. To learn more about the urgent future of the blockchain, please visit iftf.org/blockchainfutureslab.
All right. Thank you. So how does it work? Like what you saw earlier, it is a bundle of information that is being shared among millions of users. So I'll give you an example. Yeah. Let's say you have an asset. yeah, a building, okay, and you want to sell this building. You are in Indonesia, and you want to sell this building, but you want to sell it to buyers who are probably not in Indonesia. Because of this traveling restrictions, they are not able to come to Indonesia. So how will you do the transaction of this particular building that you own, or some properties that you own? So this company in China, what they did is, this building, they tokenize their asset. So the ownership of that asset, the ownership of the building, all the information, the history of the building was inputted into this document. The white paper was created, and then they launched it as a coin. It's tokenized. So this building, which was going to be bought by only few people, now this particular building in China is owned by around 60 people who bought coin to buy this building. You see, so now it's becoming so easy to sell one asset to multiple users, to multiple buyers. Previously, if I want to sell one house, I have to sell it to one buyer, because transaction legal wise is going to be difficult if I have multiple buyers. But with blockchain, because I'm able to tokenize any asset or any service, any company or any utility or any utility, like you have hotel rooms. If I want to convert the rooms into tokens and launch it, yeah, people can buy those rooms using that coin. So this has become a way to raise finance. Yeah, this is an amazing way of raising finance, and also for amazing way of allowing multiple ownership. Now I want you to tell me what could be the good side and the downside of this ability to do transactions in the cross borders in this manner. What do you think will be the good side and the downside of this? Yeah, can I hear some views, some suggestions, some thoughts? Yeah, I'll call 2 or 3 of you. Livia, why don't you share your thought about what you heard earlier about blockchain? How do you think it could be good, or how do you think it could be also misused?
I'm sorry, I don't really know about blockchain, but after listening to your explanation and the video, I think that the downside of blockchain is like a little bit riskier. The risk is higher, while the good side is that it is easier for us to carry out our jobs, and like it's more efficient that we can share our documents with other people.
We can share our documents to other people. But the downside, you said, is riskier. Why do you say that it's riskier?
Because just like the example of Bitcoins,
yeah,
it's like 60 people own the buildings. It's like, I don't know, I feel like the risk is high.
It's just that you're not comfortable with this idea of one building owned by 60 people, right? Suddenly it's something new, so people are always afraid, right, of something new way of doing things.
Yeah.
But yeah, but this thing is real. There's a clean, so many unutilized assets are there in Indonesia. If the government allows us to tokenize assets in Indonesia, don't you think we can have a huge inflow of investors coming to Indonesia? With their if we were able to digitalize and tokenize our assets. But downside, what could be the downside? Suddenly, if we allow that, don't you think China will literally take over Indonesia? they have enough money to come in. They can just buy the coin and own assets in Indonesia without physically entering to Indonesia, right? So do you notice that I'm able to have cross-border transaction without and with bypassing all the investment regulations? I don't have to pay tax. I don't have to enter into the market. I don't have to set up a company. I can already buy. And what could that lead to? I don't have to comply with any regulations. So this is why Indonesia has not yet adopted blockchain fully, as much as Singapore has, as much as China has, as much as Hong Kong has. So lots of companies are doing this, digitalizing and tokenizing their assets. In addition, let's hear some more views. Yeah. So there was one good view about the risk. Ms. Vanessa, you want to share some thoughts on what you heard just now?
Which Vanessa?
Because we have three.
We have
many okay. Vanessa here.
Vanessa Clementina. Go ahead.
Yeah, I think it's riskier because, like, as far as I know, there is still no regulations, and like banks are unable to like track our transactions, so it is possible for money laundering.
Okay. I was waiting for that word, Vanessa. Don't you think that this could lead to money laundering? So I have unclean money. All I do is buy the digital coin, digital asset, which has an underlying, which is the building. And now, once I already own that token, I could sell it, yeah, and cash it out in Indonesia, for example, in Indodex, and there my money is clean. So it could become a laundering machine, but very good point, Vanessa, right? So these are some of the downsides. But again, if things are regulated, there's a way to identify, like how do you mitigate money laundering? You could do what is the normal process for mitigating money laundering? You need to do KYC, right? The know your customer, right? You need to do understanding that who is this customer? Does he have a recorded profile? Has his funds being checked in terms of his legitimacy? And only those people can buy this particular asset. That could also be done as a mitigation point. Yeah. So now let me give you another perspective of blockchain. In Indonesia, we also have lots and lots of issue with regard to intercompany transactions. Yeah. So a group will have, currently I'm auditing a company which has 14 companies within the group, and that's in Indonesia, and then you have another 5 more in Singapore. So whenever we are, let this company needs funds, the another company will transfer and record it as receivable from this company. So you will have a lot of intercompany receivables, intercompany movement of goods, intercompany transfer of assets, and at the end of the day, it will become so difficult to reconcile, because as you know, in IFRS 3, you need to eliminate, right, all the intercompany balances. So that elimination process is very painful if every system is centralized. But by implementing this decentralized ledger, where every time I'm having a transaction with a subsidiary, if I have this shared document or a shared record, or we call it a block, then this shared document already can trace that this was the movement given to this particular subsidiary. Any sort of inventory movements are recorded within the same block. So when the reconciliation is happening live and happening real time. So I just have to go to that one particular document and identify all the movements and then clean off the records. So blockchain helps a lot in eliminating the need to do intercompany reconciliations. Also the reconciliation that I told you earlier, from customer to us, we reconcile, also we don't need. And also, how do we do asset audit? When you learn auditing and you want to audit, there are many assertions. One is where you're supposed to identify whether the company owns the asset. How about the ownership of the asset? How do you know that this building is owned by this particular PT? How do you know that? Yeah, so we look at how do you know this land belongs to this particular company. Yeah, so because in Indonesia, one land can be owned by many owners. There's multiple certificates in Indonesia. And this is not only a problem among private buyers. Even in the state government, they also do not know which land belongs to the government, which land belongs to private entities. It's a total mess. Yeah, the books maintain. I was teaching a state government in DKI, Pemprov DKI. They also share the same thing. So much of issues in asset tracing. So with this issue, what we can do is we have digital. If we can convert manual certification to digital certification, right? Whereby the history of a particular asset, let's say the asset was available in 1950. Then this particular land was bought by somebody in 1965. The whole trace until 70, 80, 90, until now, the whole trace is there. Yeah, because the certificate is digital. It cannot be tampered, cannot be changed. People will know exactly who owns this particular asset now. So if I have a digital certificate that is present in the blockchain for all the assets of the company, I don't have to do ownership verifications anymore. I just have to ask for the digital certificates. Do you know even universities now are issuing blockchain-based digital certificates? So if you go to your LinkedIn profiles, there are some individuals who upload digital certificates to prove that they really went to that university. These certificates cannot be tampered. Nobody else can use it because there's a code attached to it. So that helps a lot in asset verification. That in terms of the audit. Yeah. Also, if you notice in Indonesia, we have people who sell coffee, and they ask you, you are able to do something called traceability. Traceability, meaning you can know who was the farmer who got this coffee beans, where did it come from, the name of the farmer. Why? Because the blockchain of information is being shared from the origin until the end. So it becomes, the traceability becomes easier. So you know where it came from. So when you're buying coffee and you really want genuine coffee, then you know that, okay, I want to know coffee where I can track the traceability of things. Even particularly vaccines, for example, if they were able to trace that these vaccines are real or not real, they can attach blockchain information tag to it, and then they can have verifiable. So if you notice, the principle is decentralized, untampered information. And because of the decentralized and everybody has information, access to it, nobody can tamper. For example, stock market. Stock market is centralized or decentralized? I want to ask you. Indonesia Stock Exchange, centralized or decentralized? Who is determining the price of a particular share? Who determines that? Market. But who's getting all this market information? Is it one body and inside the Indonesia Stock Exchange, or between me and the buyer and me directly can decide? Who regulates the machine? Who regulates the machine? It is the stock exchange itself. So that's why you see a lot of distrust in Indonesian shares companies, because they say this is saham gorengan. Why they're able to do gorengan? You know what is gorengan? Saham gorengan, right? Whereby they are able to manipulate by working together with the underwriters in terms of the hiking the share price by entering into the trade, even though the money to buy those shares are from themselves, from the lenders, So you will see some share hikes are so high, 24%, 30% in a day. So they are doing cooking, they cook it up. But if this was done in a blockchain environment, nobody can cook it up. It will be the genuine buyer of the actual trade buyer, which is his identity is verifiable, and the seller also, the identity is verifiable. You cannot have lenders and banks coming in and trying to boost up the price of something. So if you ask me, share price under blockchain market is more reliable. That's why the idea of doing ICO, initial coin offering, compared to IPO is more attractive. IPO, you need to spend in Indonesia easily 2.5 to 3 M to get it done. Plus, you need 5 M cash in your bank balance. Yeah, but ICOs can be done as cheap as 250 million rupiah. You already can get an ICO. So you guys want to launch a company and want to get funders to come in. You do ICO. People will invest in your companies. The problem is in countries like Singapore, there are lots of like what I say, technology is a gun. You use it for murdering or use it for safety. So likewise, this ICO projects, some are real businesses, some are scams. There is no real business underlying the blockchain. So if I'm offering you, hey, you invest in my coin because my business is this, but the business doesn't exist. There is nobody verifying and auditing the business. So then again, it defeats the system. So you still have a problem in ensuring the business is still a legit business. So ICOs are better options than IPO. So these are some of the use cases, from blockchain. So let's see how it operates. For example, Ms. Tias, can you go back for a while? Invitation to so it creates trust between parties by having multiple encrypted copies of the same information. Remember your Google Sheet. If you remember blockchain, remember your Google Sheet. Next. A system that spreads the ownership of a ledger across multiple parties. It is fundamentally an accounting technology. So blockchain will do for information what the internet did for information. So blockchain is the next big thing. Guys, if you are being launched into the market and if you didn't learn anything to do with blockchain, you will waste out. So get to learn what is ICO all about, because when you start working, by the time you start working, companies would have already applied this. So this is the next innovation for accounting world. But Indonesia still has regulatory barriers. But it's always like that. Gojek was launched without any license yet in terms of transportation license. But once the growth happened, then the license follow. So I think by the time this blockchain becomes already big, then the license will come in. So don't wait for regulation to happen first and then you start learning. This is already there. Next. I need to rush a bit. So what you know it as only as a Bitcoin, but there's a bigger chunk to blockchain. Next. So now, particularly in terms of sending money, you've heard about this application called TransferWise. I don't know if you have used this, called TransferWise. Previously, if I want to transfer money, I will go to the bank and say that I want to transfer money to my friend in Australia. right? So bank will charge you a hefty sum of fee for doing remittance to Australia. But with the work of blockchain, you go to open your website, your TransferWise, tell them what you want, how much you want to send and where to send. They have a same block of information with the same coin attached to the Australian side. So the moment you send $200, the Australian side receives this $200 digitally without any transfers going through the central banks, digitally. And at that very second, your friend in Australia will receive that fund, very second. So I've used TransferWise for many occasions. And when I transfer now, my family in Singapore or in India will immediately receive this fund. So it's amazing. It's amazing the way blockchain has changed payment gateways and remittance. So remittance, and this one is a hugely affected by blockchain. Yeah. Particularly if you are doing export import, there is always a distrust between two parties. The one who want to export the goods, he doesn't trust the buyer to pay. So normally he will ask for LC. You issue an LC, then I will send you the goods. The moment the bill of lading is there, the LC will be released to me. But now I don't have to buy expensive LCs. In Indonesia, we have very expensive SKPDN, which is a credit line facility, right? Very expensive. You need to pay a substantial interest. But if you are able to tell the buyer that if you can transfer this coin to me, the moment bill of lading is issued, the coin will be able to be received by me. So that's it. I can already receive the money without going through trade finance facilities. This is amazing. Yeah. Next. Let's. I've already explained this. Next. Yeah. So what is the advantage? It's decentralized. It is secure. So in fact, I want to tell you today, Bitcoin, if it had an underlying asset, because Bitcoin doesn't have an underlying, that's the problem. So whatever Elon Musk say, the prices go up and down. But if you had any underlying asset to your coin, the digital token, then it is very secure. Nobody can actually change the pricing unless the market is changing it. Nobody can goreng this price. Yeah, this is really secure, because anytime one person wants to play around with the figures, 1 million users get a notification. So it's the most secured way of doing a business transaction. Next. Yeah, unalterable, and is distributed computer processing. Next. Every time you want to create a new transaction, every one new transaction starts with one user. Yeah, but it's propagated to a network of identical ledgers without a central controller. So there is no intervention at all. It is a genuine transaction. So it is possible if your your car sharing facilities, your app is currently Gojek, right? Because that's created a marketplace for you to share cars and Grab. Yeah. But if you have blockchain-based technology coming in Indonesia, then you do not have to interact with Gojek anymore. It will be you with the car owner. There is no additional fee that is being deducted for the for the company itself. So even Gojek and Grab are under threat of blockchain technology being adopted in Indonesia, because it allows direct interaction, like banks. What happens to your money? You put your money in the bank, and you get how many % in your bank when you deposit? You get deposit rates are currently 3.5%, 3%. And what do they do with your money? They give your money to borrowers. For how much? For 11%. So it is your money being lent to some borrowers, right? So banks make a lot of money. If you go and check the profits of banks is always in trillion rupiah. Yeah, but do you know that they use your money to make the trillion rupiah? You as finance person should be very upset that my money, but banks make so much of profits from my money. So, but if you have blockchain where it allows you to have direct interaction with the lenders, right? It's my money. This is the land. I am the owner of the money. Let's say I'm 100 depositors. So we are all in a block, right? And then we have the borrowers who are also in a block. If they want to borrow money that I have, they could interact with me directly without the need of having any bank in between. You notice that now, instead of the bank making that margin between your 3.5% and that 11%, you make direct profit from the borrower. That's amazing. That's what we call peer-to-peer lending. You've all heard about P2P lending, right? So peer-to-peer lending directly. So this is the basis of fintech. Financial technology is based on this blockchain technology. So a lot of companies will say, okay, you won't need money. We are a group of 10, a group of 100 depositors. We bring in our money together, and you can borrow from me using our blockchain system. Amazing, yeah. So propagation, permanence is always going to be there. You never have to destroy the data because it is on in a huge infrastructure. And then it is programmable. Yeah, new generation blockchains are programmable for allowing for automation of new transactions and controls via smart contracts. Yeah, so if you learn blockchain a bit more, you will learn how to write those coding for smart contracts. Yeah, next. So the forecast, the business value driven by blockchain will amount to $3.1 trillion by 2030, which is not very far. Yeah? It's around 9 years away. So I think you have enough time to start moving and learning more of blockchain. Yeah. Later, if Joshua and me, we are working on more programs, there is a separate training for blockchain itself. Next. Remittance, which I've already explained to you, companies like TransferWise, Abra, BitPesa, Circle, they all allow you to wire money from one country to another without any bank's involvement. Yeah. Next. Payment gateways. Yeah, you can collect money from your startup companies, and you can ask you can collect money worldwide. Yeah. So that's the idea of Mycelium, one of the companies which uses the fintech base for collecting payments. Next. I've explained this trade finance. You don't need LCs anymore. You can directly do transaction with your importer or exporter. Next. Okay, so some information on how blockchain impacts certain industries. Okay, so Mr. Since I have another, say around 15 minutes left, let's go into the next item. Guys, I have the discussion part of things I wanted to do, but I think let's keep it going, then we can discuss at the end, okay? Now, let's hear about the remaining two technologies that I need to present to you. Firstly, it's about your artificial intelligence, yeah, and then about your machine learning, deep learning, and then natural language processing, NLP. Yeah, so, and then of course, then the final is the robotic process automation. All right, so the bigger data set is about artificial intelligence. Okay, so this is how artificial intelligence works. Yeah, so they use neural structures to learn, like what I said, you know, to learn unstructured data. You see, like what I said, you know, your brain is able to process not only structured data, the amount of sales, but you're able to process emotions. You're able to process, images. You're able to process videos. You're able to have certain judgments, certain preferences, right? So what they do is try to replicate your unstructured data processing system in your brain and replicate that in the machine. Yeah. So for example, if you would like to have artificial intelligence for how financial reports are being made, right? So you will have certain preferences that, okay, I want to have making sure that my classifications of all the accounts for certain kinds of assets, certain assets I will classify it as property, plant and equipment, certain as investment property, certain as intangible assets, but these are my criteria. So like what I said, the machine will learn from you. Yeah. So AI functions, yeah, AI itself has many subsets. So what are the subsets of artificial intelligence? Number one is machine learning. Okay, number one is machine learning. So machine learning, what does machine learning do? It takes what I said, algorithm. It keeps trying to develop a model to learn from your past data, which you are trying to teach the machine. Remember, the teacher is you. Yeah, the machine is the learner. Currently, you are learning, right? But here, machine is learning. You are the teacher. So that is machine learning, algorithm from existing data applied to a new data with regular trial and error until it achieves 80% accuracy. Okay, so that is machine learning, right? Now, deep learning is where they use neural network. So neural network talks about unstructured data. Yeah, example, images, video, speech. So that's why when you, if you go to audit firms, this is how your future audit firm will look like. You call the audit firm and say you would like to talk to the tax services, right? So the one who will receive you at the reception is not a human being. The one who will receive you is a machine who knows that, who can already predict what are the questions you will ask, right? You will say, I would like to submit my 2020 tax returns. Then the person will already be trained what to respond. Oh, I would like, have you submitted your monthly returns? What is your estimated profit for the year? So they'll ask you this question, provide you the service, and this is it will almost become like a drive-through experience. You know, so going to a Big Four auditing service or accounting firm will be as structured as how drive-through is. Yeah, of course, drive-through still has the element of a human there, but there now with your accounting services, using AI, it will learn what are all the questions. Next time when you ask something else which the machine doesn't know, it will record, right? And they'll say, and it will get more data. So it will keep growing. Yeah. So there is this deep learning, which means I'm going to talk about unstructured data. Yeah, and then natural language processing is your gap between human language and your computer language. So all this while we had a gap, right? Because we don't understand, do not know Java, do not know all the programming languages, right? But you see a lot of programming languages apply NLP in their programming, so that like one of the examples I can give you is your hashtags. You notice your hashtags are sort of semi-structured. You hashtag this, hashtag, digital accounting class, hashtag Mr. Joshua, you hashtag everything. So these hashtags are actually a way for you to express something, but the machine is taking that as instruction to identify all the articles, all the information or all the posts relating to that particular tag. Yeah, so they are trying to minimize the gap between machine language and human language. So that is what we say natural language processing. Classic example is your hashtags. Yeah. So this is AI. What is below AI? Machine learning and your deep learning. Machine learning looks after structured data. Deep learning talks about unstructured data. Yeah, what is deep learning about? It's all about copying the biological brain and using the same method to apply in the actual decision making. Yeah, so this is conceptual. Now let's see how it is being used. Next. Now you see in Excel, if you see the word, there is this called program synthesis. So if you have column 1, name, column 2, email address, column, the first name, and then you have your second name, your surname. Then when you go to your column 3, which is email, the Excel will try to give you suggestion on your email address. So it will be suggesting you those email addresses. So it's an autofill, or we call it flash fill. So the Excel itself has machine learning enabled now, the latest Excel. Okay, so this is about an example of how machine learning is operating. Accounting software, I gave you example earlier about Xero, Xero. Yeah, how they are able to learn all your accounts, chart of accounts, what kind of journal entries you normally make for a particular transaction. They will learn from you, and then they implement in your next time when you come and fill your transaction. It becomes quite easy. What is the downside of this? If you have, from the first 2 examples I gave you, I know time is limited, but I want to hear you. Edward, what is the downside of these machine learning functions in Excel and in Xero?
Like in Excel, we an accountant can probably like delete some data or maybe change some data so that they can get the maybe the firm's profit or something. But at Xero, I cannot think anything that is negative.
Could be a downside.
Yeah, I cannot think anything that
you know, if your entry conceptually, your journal entry is weak, and you classify let's say development expenditure, you know, in IAS 38 development expenditure can be capitalized, but it has to meet criteria, right? Under intangible assets, it has to meet criteria, then you can capitalize. But if you can't, then it has to be written as expense. So if you are teaching the system that all development expenditure to capitalize without any giving criteria about the 5 criteria, but these 5 criteria about technical feasibility, commercial viability requires judgment. You know, it requires judgment. So not every time you tell the system, hey, Mr. Computer, not every time development expenditure can be capitalized. It has to meet criteria. Whereas this system, because you've done that in the past, automatically it will post the development in the as intangible asset. So it is difficult to teach the system with variety of elements when it particularly it comes to judgment. So it is journal entries may not be accurate because of that. But if you yourself teach the wrong entries to the computer, then you will get wrong entries anyhow, you know. So it's what you teach is what you get. Last time is what garbage in, garbage out. Yeah. Now is what you teach is what you get. If you teach wrong stuff, the system will respond to exactly what you taught the system. So yeah, that's the downside, Edward. Yeah. Okay. I'll move forward. Google search. There is some downside on Google search. whereby it has some biasness. If you look for certain words, it will tend to give you some results based on the previous, the top. You see, because it goes on the first page is filled with results of the previous searcher. So the previous searcher who put that this is the result, this is the search word, and this is the result, is based on the previous user who has used Google. So if the previous person is biased, then the result will be biased. You see, so this is a Google search issue. Yeah, so there is a good side of doing AI, but downside is, you see, technology was meant to be objective, right? Doesn't hamper, it is supposed to be not disturb, but because now technology is interacting with the human, it has become more subjective than objective. So we have to raise this question that is technology really reliable or not? Because now technology is almost integrating the human and the machine. So because it's integrated now, I do not know. Should I trust the machine? Should I trust the machine or not? Because this machine is already polluted by the human that was interacting with it. You see, so there is this issue with AI. Yeah, loan credit card applications, they will track down your transaction history, where you have spent the money, because everything is already being laid out by the bank. Yeah, so they have information about your previous loan, in which other company you took the loan, how much you have been spending. So the results of loan applications comes faster. So these are some of the examples of AI in accounting. Next. Next, Ms. Diaz. Yeah. So AI will be a receptionist in accounting firms. They will surely be in the front line of tax department, like what I explained. AI will read and digest the financial report and explain in human language to the users, because like I said, annual reports are not being read. So AI will digest those reports and provide insights to the users that this is the condition. So whatever you did before lunch break, the AI will be able to provide some part of that to the user. So this is a potential development in AI. Next. Yeah, so if you go to certain companies where your robot doesn't look like a robot anymore, so it takes the appearance of a human. So you will have difficulty deciding whether are you talking to a human or you're talking to a robot, because all the interactions will be as human as possible. Yeah, so this is already happening. Yeah, the intelligence augmentation where machine and a human augment each other. Yeah, so this is a ongoing thing. While I'm showing you all this technology, all I want you to think about is that how will it change the world of your profession? Yeah, where you are expected to teach the machine, you are expected to provide insights, judgments. So if your mind is more procedural oriented, you are not a thinker, then you will lose out in the upcoming profession. Yeah. Next. Yeah. So I think we'll skip this for the benefit of time. Machine learning. Yeah, so I've explained this here. This is the subset. Do you see this? On the upper circle is AI. Yeah, machine learning is a subset of artificial intelligence, right? What is inside machine learning? Two things. One is deep learning, other is natural language processing. Yeah, and then data analytics involves a part of machine learning. Yeah, because what you're analyzing can be partly automated, partly, why is it outside the circle? Because partly is based on your own judgment. Not everything can be analyzed by the system. Yeah, and then you have RPA. Okay. All right. So I've explained machine learning. What about the algorithms training the data, training the computers? Yeah. I think I'll skip that so that we can have at least overall discussion before we close the session. Next. Yeah. Gathering and preparing the data, what data is required to solve the problems. Yeah. Data cleaning. Yeah. Okay. Yeah. Mistias, let's go to the part where we can have a discussion instead. So I think we have covered blockchain, we have covered AI, machine learning, yeah, and then robotic process automations, yeah, and then variety of upsides and variety of downsides. Okay, so from the groups that were made earlier,